Welcome to the Deep Dive. Okay, we're jumping straight into your source material today. It's a real deep look at the crypto market, specifically for June 11th, 2025.
That's right. You've got quite a stack here, articles, research notes.
Yeah.
Our job really is to sift through it all, pull out the absolutely crucial bits of insight.
Exactly. We're navigating what's going on right now, that whole mix of market mood, the technical charts, and those big macro forces pushing things around.
Consider this the shortcut, right? We'll cover the overall market vibe, what the key analysts and influencers are chattering about.
Yeah, and we'll definitely get into Bitcoin and Ethereum, what's happening there. Plus the altcoin scene, always buzzing.
And then zoom out to that essential macro backdrop, interest rates, inflation, all that stuff.
We're aiming for clarity, maybe some surprising facts, enough context so you feel properly informed, but, not totally buried in data.
Exactly. Should be interesting. Let's unpack it.
Okay, let's start right there, the overall market pulse. Based on these sources, what's the main feeling out there today, June 11th?
Well, the first thing that jumps out is the Crypto Fear and Greed Index. It's consistently hovering between 65 and 71.
Right, 65 to 71, so that's firmly in greed territory. What does that actually mean for you, the listener, right now?
Good question. Historically, seeing greed at this level, it's kind of a yellow flag. It suggests that the market could be getting a bit hot, maybe too much leverage, people may be ignoring risks a little. But, and this is important, it also reflects real positive feeling, Strong investor confidence. We're not quite at extreme greed yet. That's usually above 75.
So it's optimistic, but maybe a bit frothy.
That's a good way to put it. It definitely calls for caution. Does this good feeling mean we just keep going up, or is some consolidation, maybe some profit taking, more likely first?
And it's consistent across the sources for mid-June.
Yeah, pretty consistent. That greed reading really seems to capture the mood.
Okay, let's ground ourselves. The big two, Bitcoin and Ethereum, where are they trading?
Bitcoin's around $109,635, give or take. Ethereum's closer to $2,780, maybe $2,795 in that range.
And you mentioned ETH showing strength.
Yeah, that's a dynamic that really stands out in the notes. Ethereum's had periods where it's actually outpaced Bitcoin recently. Analysts watch that stuff closely, It can sometimes hint at shifts in where the money's flowing.
Interesting. So ETH making some moves on the king. All right, let's tune into the voices, the analysts and influencers.
Yeah.
What are the key takeaways there from the material you reviewed?
Sure. From the YouTube side, Coin Bureau, they often take that wider view.
Yeah.
The big thing they're stressing is regulation, how crucial these market structure bills are for DeFi stability down the line.
Right. The plumbing needs to be solid.
Exactly. And they also point to ongoing issues, like wash trading on some exchanges, It distorts the real picture of demand. And its clarity, integrity.
And Jeff Park from Bitwise, he had a slightly different angle on Bitcoin, didn't he?
Yeah, more about Bitcoin as a tool almost for regular investors dealing with global economic shifts. He even mentions stable coins, maybe helping the U.S. keep its financial edge globally.
Wow, okay. Connecting crypto to bigger geopolitical stuff.
Right. His point is that long-term health means tackling these foundational issues and fitting into the existing system, but responsibly.
Okay. And Altcoin Daily, they're always hunting for the next big altcoin move.
Definitely. They're highlighting strength in various alts right now and seeing growing potential for a broader altcoin season, maybe later this year.
Give some specific examples.
They mentioned one called HYPE, showing strength when others were just flat. And they're talking about using AI analytics now, trying to get more data-driven in picking alts, adds a tech layer to it.
Crypto banter they often call market shifts, right? What's their take?
Their view is things are really setting up for a potentially strong altcoin rally. They're looking at specific alts that seem ready to break out, but also watching Bitcoin's consolidation.
That dynamic where alts dip against Bitcoin first.
Exactly that. They explain how during BTC consolidation, alts might bleed back, lose value compared to Bitcoin as money goes to safety. But then if confidence returns, that capital rotates back seeking higher gains in alts.
Makes sense. Did they flag any specific tokens?
Yeah, they mentioned Uniswap, UNI, Ethereum Name Service, ENS, and SSV Network, SSV, as looking technically or fundamentally bullish in their analysis.
And InvestAnswers, always brings in the macro and risk management.
Absolutely. That risk focus is key. They connect crypto moves to the bigger economic picture. One really valuable insight was a warning about leveraged perpetual futures trading.
Right, the danger zone for many traders.
Yeah, they mentioned how market makers might actually target large groups of predictable traders exploiting order books. It's a serious warning about leverage. They also note global events like U.S.-China talks, influencing sentiment, their core message, calculated risks, learn from mistakes. It's a volatile game.
Okay, let's switch to Twitter, or X, at Rekt Capital, always deep in the charts. What's he seeing?
Very granular TA. He highlighted a phenomenal daily candle for Bitcoin, breaking that key resistance around $106,600.
So what does that break suggest to him?
His read is that it positions Bitcoin to maybe retest that $106,600 level, but now as support, before potentially moving higher, similar to what happened in late May.
And for Ethereum?
He noted ETH holding steady around 2,274 to this port, suggesting it might be technically setting up to repeat its strong move from the previous month.
He also talks about Bitcoin market phases, right? How does that fit in?
Yeah, that's central to his analysis. He sees BTC moving between consolidation ranges and big directional trends. He tracks phases like shifting from a first price discovery correction to a second price discovery uptrend.
And the point for you, the listener.
The key insight is that your strategy needs to adapt. If it's range-bound, maybe you buy support, sell resistance. If it's trending up, maybe you buy dips and hold longer. Adapting to the phase is crucial.
Got it. Now, at TED Talks Macro, Bridging Crypto and the Big Economic Picture, what's his key insight?
His stuff is really interesting. He emphasizes how these steady inflows into Bitcoin ETFs are fundamentally supportive, building a path towards $100 and potentially higher.
That makes sense. The demand is there.
But here's the critical twist he pointed out from history. When those ETF flows peak, like the rate of inflow slows down, that peak has historically been a leading indicator for a market top, often by about 2-3 months.
Whoa. Okay, so the flood of money is good now, but the peak of that flood is actually a warning sign to watch for.
Precisely. That idea of using peak ETF flows as a potential window to maybe de-risk your portfolio, that's a really important strategic takeaway for you to consider.
That's huge. Anything else from him?
He also mentions things like short squeezes, rising open interest as potential fuel, but his main thesis is the bull run's far from over, backed by macro stuff. A positive liquidity cycle, M2 growth not yet crazy high, crypto liquidity not manic yet, and those strong ETF flows.
Okay. And at Clemente, focusing on the on-chain data, what does the blockchain itself reveal?
He looks at metrics like coin days destroyed, ASOL, dormancy flow, basically tracking the behavior of long-term holders. Are old hands selling or holding tight?
Right. Are the experienced players taking profits?
Exactly. His firm, Reflexivity Research, tries to bridge TradFi and crypto with that kind of deep research. Based on what he was seeing, buyers looking long-term focused, he anticipated six-figure Bitcoin late 2024 or early 2025.
Can you explain dormancy flow a bit more? Why is that so telling?
Sure. It essentially looks at the price relative to the age of coins being moved. So if a lot of really old coins held by savvy investors who've seen it all start moving when the price is high, that can signal profit-taking near a top.
Okay.
But if those old coins stay put while the price climbs, that suggests strong conviction. Those experienced holders think there's more room to run.
Makes sense. And then you have the general buzz from analysts like at CryptoColeo at CC2IT.
Yeah.
Their sentiment matters too, right?
Absolutely. Research actually shows that overall Twitter sentiment, often amplified by these big accounts, can impact short-term Bitcoin prices. So yeah, keeping an ear to the ground on the general mood and the technical setups they highlight is definitely a part of the picture.
All right, let's zoom right in on Bitcoin itself. Queen BTC. Based on the sources, what's the situation right now? Charts, levels, everything.
Okay, so like we said, trading around $109,635. The big recent event was breaking that key resistance zone. $106,600, $106,794. That's significant.
And it briefly touched higher.
Yeah, wicked up near $110,380, even reportedly up towards $111,980, which is right around that all-time high mark, maybe $112,000 depending on the exchange.
So holding above $106,600 is job number one right now.
Definitely. That keeps the immediate outlook positive. If it drops below, you'd look towards the 20-day moving average, maybe $105,000-ish, and then that stronger zone around $100,000 to $115,900.
And for the bulls to really break out.
The immediate hurdle is $110,000, just psychologically. Then that $111,980 to $112,700 zone is critical. What pattern are we talking about?
There's talk of a potential inverted head and shoulders pattern forming. If Bitcoin can decisively break and hold above, say, $112,700, especially with good volume, then that pattern confirms.
It could, yeah. And if it does, the measured target from that pattern could be way up there, like $146,892.
Wow, okay. That's a big if, but a huge potential target. What are the other indicators saying? Does BTC have the juice for that right now?
Well, the RSI is positive, showing strength. But some other oscillators, like CCI, Williams-Persone, are flashing overbought signals. Meaning it might be a bit stretched in the very short term, like it needs to consolidate or pull back slightly just to cool off those readings before another push. However, the Massey indicator looks like it's close to a bullish crossover, which signals renewed upward momentum might be building.
So a bit mixed short term, but the underlying trend
still looks strong. Overall summaries on TradingView, for instance, are showing buy on daily and weekly charts. So underlying strength seems there, just maybe needs a breather.
Got it. Let's talk price targets from the sources. Short term, first, weeks, months.
Short term, it's all about testing that $110 to $112 7K resistance. If it breaks above $112 and 7K decisively, that's when talk of that $146,892 target from the H&S pattern really heats up. Other analysts see $115K, then $120K is the next steps after a breakout.
Okay. And looking further out, end of 2025, maybe early 2026.
Yeah, here the range gets pretty wide, reflecting different views. You've got some very bullish calls, Bitwise seeing $200K by end of 2025, maybe fair value $230K based partly on macro like US debt. OTT also mentioned $250K for 2025.
And more conservative takes.
Paul Barron mentioned $135K year-end. Changelly's forecast was closer to current prices, like $113K for June 2025. So quite a spread. The higher targets seem to lean on that bigger economic role for Bitcoin.
Exactly. They factor in things beyond just crypto market cycles, looking at its potential role in a shifting global economy.
All right, let's pivot to Ethereum. ETH has been showing that relative strength. What's the story there, especially with the ETH UTFs now in the mix? Yeah, ETH is definitely one to watch, trading around $2,792 to $2,795. It pushed decisively past key resistance, especially $2,700, and it wicked up quite high, around $2,834 recently. Strong move.
So what are the key levels for ETH now? Support and resistance.
Support-wise, that $2,750 area looks pretty solid now, reinforced by a trend line. If it dips harder, the next major zone is probably $2,500, $2,545, hitting a key moving average and that psychological $2.05K level.
And on the upside, to keep this rally going.
The immediate resistance is that recent high, $2,834. A clean, sustained break above $2,835 is what bulls want to see. That could really fuel a move towards $2,900, $3,000.
And beyond $3,000.
If momentum holds past $3K, analysts are looking at $3,200, maybe even $3,400 as next potential target.
Sounds similar picture, but maybe even more pronounced on ETH. The RSI on shorter time frames is definitely overbought around 72, so that suggests a higher chance of a near-term pullback or some sideways action to let things cool.
MBD histogram is still bullish, but looks like it might be flattening a bit, suggesting that immediate strong upward push might be easing slightly.
So the standard indicators are saying pause.
They are. But, and this is a huge but, for Ethereum right now, you've got those massive institutional ETF inflows.
Right. That changes the game potentially.
Totally. Sources mention record open interest, like $40 billion. And a lot of short positions, $1.8 billion worth, reportedly facing liquidation if ETH gets above $2,900.
So what does that mean?
It creates this really interesting tension. RSI says overbought, maybe pull back, but huge institutional buying could just soak up any dips. And if it does break $2,900, those short liquidations could act like rocket fuel, causing a sharp, fast move up despite the RSI. It's a powerful counterforce.
Fascinating dynamic. Okay, price targets for ETH based on the sources, short and midterm.
Short term, it's about breaking $2,834 to target $2,900, $3,000. If it holds that momentum, potential for $3,200, $3,500 in the following weeks or months isn't out of the question.
And longer view, end of 2025, early 2026. More conservative guesses are in the $3,000, $4,000 range. Light finance analysis suggested $3,300, $3,600, maybe late 2025, early 2026. Binance user consensus was around $2,934 for 2026. Rekt Capital also noted ETH looked technically positioned for another spike up.
And those ETS inflows are the big underlying story.
Absolutely. That $1.5 billion to $1.7 billion flowing in over just 7 weeks, that's a massive bullish undercurrent. It suggests traditional finance is fundamentally reevaluating ETH's worth.
Okay, let's broaden out beyond the big two. The altcoin arena, always volatile, lots of potential, lots of risk. What's the latest on Bitcoin dominance and the whole altcoin season idea?
Yeah, this is super critical right now. Bitcoin dominance, or BTCD, Bitcoin's market share, is sitting at a really key level, struggling to get much above 64%.
And analysts see bearish signs for it.
Some do, yeah. Mentioning patterns like broadening wedges or rising wedges on the BTCD chart, which could suggest it's due for a drop. And the key point is, if BTCD breaks down significantly...
It's usually good for altcoins, right? Money flows out of BTC into alts. Exactly. Historically, a clear break below 60% on BTCD is often seen as a major signal that a broad altcoin season is really starting. Plus, ETH outperforming BTC recently adds fuel to that altcoin fire.
The Altcoin Season Index moved up too.
It did, yeah, showing BTC dominance fading a bit. But it's still pretty low, nowhere near the level that screams full alt season.
So it sounds like there are mixed signals again. Is alt season here or not?
Definitely conflicting views in the sources. Some analysts think that BTCD breakdown is coming very soon, which would kick things off. Others, like stock money lizards, are more cautious.
What's their view?
They argue the real crazy altcoin season often happens late in the bull run, the final euphoric phase. They think we might still be earlier, where BTC leads and institutions gather coins before rotating later. For them, the key is waiting for that decisive BTCD breakdown confirmation.
So how do you navigate that uncertainty if you're interested in alts?
Well, the conflicting signals suggest it might not be one big wave. Maybe it's sector-specific first. Like ETH and its ecosystem takes off due to the ETFs, then maybe other narratives follow if BTCD really tanks.
So a more selective approach.
Seems sensible, not just blindly buying everything. One strategy mentioned was looking for specific alts that seem extremely oversold technically, maybe accumulating those carefully, and even considering rotating some profits back into Bitcoin to build your BTC stack before a more confirmed, broader alt run. Manage that risk.
Makes sense. What promising altcoin sectors or narratives were highlighted in the source material? Keeping in mind, this isn't investment advice, obviously.
Right, always do your own research. But yes, several key themes came up. Real-world assets, RWA is a big one.
Tokenizing real stuff.
Exactly. Tokenizing things like credit, property, bridging DeFi, and traditional finance. Tokens like Ondo were mentioned. Chainlink, L-I-N-K, is crucial here for its oracles connecting real-world data. Maker, MKR, is using RWAs with its DAI stablecoin.
And BlackRock's involvement gives it legitimacy.
Huge validation. Their BUIDL fund on Ethereum is a major signal. It needs good infrastructure and clear rules, but that institutional interest, that's foundational.
AI tokens are another hot area.
Definitely.
Yeah.
Using AI for crypto trading, decentralized machine learning like BitTensor, TAO, or decentralized computing power like Render, RNDR, which actually fits in another category too. Newer projects like Dogs AI, focused on trading bots, also got a mention. It's about challenging big tech AI, but yeah, super volatile sector, careful risk assessment needed.
Layer 2s, essential for Ethereum scaling.
Absolutely critical if Ethereum is going to handle mass adoption. Arbitrum, ARB, leads and value locked. Optimism, OP, has its superchain vision. ZK rollups like Starknet, STRK, are live. ZK Sync, ZK Token is anticipated. They offer security benefits. And Base, from Coinbase, is gaining traction, especially for NFTs and social apps. It's competitive, but winners capture those network effects.
You said Render fits elsewhere too.
Yeah, DePIN decentralized physical infrastructure networks, using crypto to incentivize building real-world infrastructure. Render does it for GPU power. Filecoin, FIL, for storage. Helium, HNT, for wireless networks were other examples.
So connecting crypto to physical stuff.
Exactly. It's tangible. Might be easier for mainstream folks to grasp the value proposition there.
And finally, gaming and the metaverse. Still relevant.
Still a big narrative. Tokens like Sandbox, Sandy, Decentraland, MANA, Gala, GALA, Immutable X, IMX. The drivers are digital ownership, play to earn, interoperability. But success now really hinges on good gameplay and solid tokenomics, not just hype, and infrastructure like IMX solving gas fees is key.
Okay, let's pull back to the big picture again, the macro environment. How are things like interest rates and inflation affecting the crypto market according to these sources?
Well, the general relationship holds. Lower interest rates are usually seen as bullish for crypto. Cheaper borrowing, less attractive yields elsewhere can push money into riskier assets like crypto.
So all eyes on the central banks, especially the Fed.
Absolutely critical. If inflation cools down enough for them to start cutting rates, that could inject liquidity and potentially boost crypto, especially alts. And even just the expectation of cuts can move markets.
What about the latest inflation data mentioned?
The CPI data cited, like March 2025 at 2.8%, showed a slight decrease. Generally, lower than expected inflation is seen as good news because it might make the Fed more likely to pause hikes or even cut rates. Higher inflation would push them the other way, dampening risk assets.
And how does this tie into Bitcoin as an inflation hedge?
It's complicated, right? Long term, maybe. But short to medium term, Bitcoin's price seems much more driven by overall market liquidity. And that liquidity is directly tied to how the Fed reacts to inflation. So the Fed's response often matters more for BTC's price near term than the inflation number itself.
Okay, now the really big macro factor right now,
Whoa.
those ETFs and the institutional money.
Yeah, this is genuinely transformative. The sources just hammer this home. Huge inflows into the spot Bitcoin ETFs, BlackRock's IBIT hitting around $70 billion AUM incredibly quickly, and the new Ethereum ETFs also seeing strong, consistent weekly inflows, billions pouring in over just 7 weeks.
That's just massive demand. What's the impact?
It's a fundamental structural shift, adds persistent buying pressure that just wasn't there before at this scale. As TED Talks Macro pointed out, it supports that path to $100 K for BTC, but remember his warning.
The peak flow warning sign.
Exactly. Monitor the rate of those inflows. If they peak and slow down, history suggests that could be your 2-3 month heads up before a potential market top. Institutionalization means their decisions have bigger ripple effects now.
And quickly, U.S.-China trade talks were mentioned.
Yeah, just as an example of how broader geopolitics matters. If tensions ease, it reduces global uncertainty, generally boosts risk appetite, which can be a tailwind for crypto too, shows how connected everything is becoming.
Okay, let's bring this deep dive into your source material home. Pulling it all together, the greed, the analysts, BTC ETH technicals, alts, macro. What's the final pulse check? What's the overall sentiment on June 11th?
Okay, so the overall feeling, it's definitely leaning bullishly optimistic, but diluty, and it's a big but. It's strongly tinged with caution.
Bullish because?
Because the fear and greed is high, showing positive sentiment. Because those institutional ETF flows for both BTC and ETH are massive, undeniable. Technicals for the big two look pretty good on higher time frames. And there's real excitement in those altcoin narratives like RWA, AI, DePIN.
And the caution comes from?
Comes from that greed level itself. History says be careful. Short-term charts, especially ETH's RSI, look overbought, hinting a pause or pullback might be needed. Bitcoin dominance is at a tricky spot, making alt season timing uncertain. And of course, macro factors like inflation and rates always add that layer of unpredictability.
So cautious euphoria, is that a fair way to describe it? Lots of good signs, but some warning lights flashing too.
I think that captures it perfectly. You've got powerful new forces pushing up, but traditional signs suggesting maybe things are a bit stretched short term. The huge question is, can these massive ETF inflows just steamroll those traditional overbought signals right now? Or do market mechanics still demand a cool down?
Based on the outlook and the sources, what should you, our listener, keep in mind for the near future?
Short term, expect bumps. Volatility, especially around macro news or key technical levels. Bitcoin looks set to challenge those all-time highs. If it breaks $112 and 7Ks cleanly, that could unlock much bigger upside, maybe towards that 146K figure or more. Ethereum's strength is key. It could lead if alt excitement picks up, helped by its own ETF buzz.
And looking a bit further out, medium term.
The outlook seems pretty constructive overall, especially if global liquidity improves, maybe we get those rate cuts, and if these strong institutional ETF flows continue. For alts, though, it looks like careful selection is key. Focus on solid projects, clear stories in those trending sectors. Not everything will rise equally or at the same time. So yeah, that really wraps up our exploration of your source material for June 11th, 2025. It's a really complex picture, isn't it? These powerful new tailwinds from institutions, promising charts, but balanced against those classic warnings and ongoing macro questions.
Definitely. So here's a final thought for you to chew on. With this greed level, but also these game-changing ETF flows, do you think the market just powers through from here? Or is some kind of healthy correction or consolidation needed first to build a stronger base for the next move? What's the one key indicator you'll be watching most closely to figure that out? Bitcoin dominance, ETF flow speed, inflation numbers,
Worth thinking about what stood out most to you from our chat today. Maybe dig deeper into some of those analysts or topics yourself.
We really hope this deep dive gave you some valuable perspective on where the crypto market stands right now.
And just a reminder, as always, crypto is volatile. This isn't financial advice. Please, please do your own thorough research before making any investment decisions.
Stay informed, stay curious, and keep diving deep.